Today's episode of The Compound and Friends is brought to you by our friends at Bird Dogs. Today is the perfect time. They're in the sweet spot. I'll tell you why. They've got pants, right, with liners. It's pants weather because it's sort of cold in the morning as we transition from spring to summer. And it's shorts weather. We're like right around the corner. It's like 56 degrees in New York City. It's not quite shorts weather. Got the pants today. Shorts hopefully next week. Go to birddogs.com/Michael and use the code Michael to get a Yeti-style tumbler from Bird Dogs with every purchase.
Let's go. Got good friends in the house today. Vibes are good. I got to tell you, I've been excited for this episode for a while. And, you know, Leanna, I'm going to give you guys official introductions in a minute. But Leanna is a third time. Are you four?
Four. Time.
Come on. Look at this.
I don't even know why you guys keep asking me that, but I'm so glad to.
Because you're amazing.
Because you're amazing. Yeah. That's exactly right.
Hey.
Let me do your intro. Hang on one sec. Here we are. Okay. Leanna Haakons is... Wait, what happened to this? Oh, here we
Haakons.
go. No, let me do it my way.
Like Black Hawk.
But that's just my accent.
Is that the Long Island?
The Long Island?
Leanna Haakons is the founder of Blackhawk Financial, a financial business development and marketing firm. Leanna frequently makes appearances on CNBC, Bloomberg, Yahoo Finance, and wrote the book Young, Fun, and Financially Free. Yes. She is also a change maker.
Yay!
All right. And first time on the show, my friend Ian Dunlap. Ian is the founder of Red Panda Academy and the creator of Market Mondays with Earn Your Leisure. Ian has also been featured at Forbes and on The Breakfast Club. Welcome to the show, Ian.
Thank you. I'm honored to be here. Longtime fan. It's a privilege to be here, seriously.
The Breakfast Club is a big show, like much bigger than this show. What was that like going on with those guys?
It was amazing.
Yeah.
I mean, like when my mom called and my aunts called and friends from high school, like, oh my God, I saw you this morning.
Yeah.
All those crazy investment ideas. I guess they're panning out. So it was fun. So shout out to Charlamagne, Envy, Yee.
DJ Envy, Angela Yee, Charlamagne. Okay. Where do they tape? They're in Manhattan?
Yeah.
Okay.
Manhattan, yeah.
All right. And Earn Your Leisure in general, though, is on a lot. So could you explain to the audience what Earn Your Leisure is and what your role in that whole movement is?
Yeah. Earn Your Leisure, shout out to Troy and Rashad, but we felt it was necessary to create a platform for Black and brown people to easily understand investing and how to make money in the market. So when I met with them, I did an episode with them, episode 70. It was the month before COVID hit.
Oh, wow.
So we taped it, and I asked Rashad, I'm like, hey, when's the episode coming out? I'm like, everything's going to fall apart. Because I'm trading futures.
Were you bullish during the episode?
No, I was on ones we'll talk about today, Apple, Microsoft.
Yeah.
But I was short the S&P futures at the time, and I'm like, the market's going to fall apart. It hit, and that's when it kind of clicked for them. Like, okay, he knows what he's talking about. He does have some controversial takes, but he's actually doing what he's saying. Then the episode came out, it caught fire. And we just went on YouTube Live one day, and I just called out technical levels. Like, I did my JC thing, like here. No fundamentals, all technical. Shout out to JC.
Yeah.
And people, in the next 2 months, some people were up like 30%.
Okay.
And it just caught fire from there. And then we created Market Mondays, and the rest has been history.
All right, so Market Mondays, we'll plug all this stuff later. But basically, Troy and Rashad founded Earn Your Leisure.
Yes.
And you do that show with them every week.
Yes.
And that's like very much your brand.
Yes.
As well as theirs.
Absolutely.
And that must be a lot of fun.
It's incredible.
You guys have a huge audience.
Yeah.
They tune in every week.
Yeah.
I see it, like every time you put something out on social media, I see it go crazy.
No, I mean, you guys are a huge inspiration behind it. I told you, I know you hate when I say it, but to me, you're like the Mark Haynes of our generation.
Okay.
And Mark called the bottom, like, so your transparency, honesty, you and Kramer were like the two that I know Kramer's had a tough time the last 2 years, right? But he was the inspiration for the show. So I want to
see my cholesterol. We're all having a tough one.
This year's
I appreciate that.
Of course.
Thank you. And Leanna, tell us a little bit about what the journey from the book being published has done for you.
I mean, yeah, the book is sort of what started me in the influencer space, whatever you want to call it, in financial media.
I think we settled on Changemaker.
Yeah, okay, well, I'll be a change maker today. That's cool with me. With the book coming out and all the proceeds of the book go to charity, and it was a client idea that I was helping his daughter out who's in college, and she was spending a lot of money and didn't really have any education around it, even though she was from a family that was self-made and financially successful. So it was a client that gave me the idea to write the book, and all the proceeds go to a charity that supports income opportunities and economic sustainability in third world countries.
That's incredible.
And sort of that's like the nod to anyone that has access to this podcast or, in the Western world with the education opportunities that we have and, people like Ian to follow and learn from, that they can change their financial situation.
You're going to follow that book up? You got another one in you?
I really have to update it. I mean, there's not even in the last 5 years, we didn't even talk about crypto in the retail space 5 years ago.
Right.
Like there's not even a mention of it.
See, that's the cheat code in books is just don't write a new book, just update the old book.
I got to update it, put some digital in there. We'll talk about some AI today, maybe put some AI in there, a lot of the hot topics. But technology changes so fast. So I need some updates there. But doing a lot in financial media and still just, running my company, marketing, IR, business development, and finance. And I've been doing that for over 15 years now. So
well, we're so happy to have you both here. Kind of a big week. We had a Fed meeting this week, which we'll get to. Apple reports this week. This is the most important stock in the world.
Absolutely.
On a lot of levels, not just because of how big it is in the indexes, but just people pay close attention to what Apple is doing, and then they extrapolate out, well, what does this mean for everyone else? What do we got on Apple going into the number?
Well, Apple, I don't know.
Okay, great.
First of all, but I will say that it does seem like, so Apple's the last mega cap tech stock to report.
Yeah.
We got NVIDIA, but Apple's the big one. And the market, hanging in the balance is too strong of a word. It's not like we're looking at over the edge of a cliff, but market's been vulnerable, rocky the past few days.
Yeah.
So I feel like, I don't know if an Apple beat can take the market to new highs, or forget about new highs, could take the market to its next level. Yeah. But if Apple misses, it could definitely be a rough couple of days for the market.
Yeah, I think if they miss it, oh my God, I think people will go into full
That's
panic.
scary.
I mean, Microsoft did well, thank God. Another one of my favorites. But if Apple doesn't do well, which I think they will, I think people are going to panic.
I agree because the S&P is up about 6 or 7% on the year to date.
Yeah.
Not that is so important, but people pay attention to year to date. Apple having a tough day tomorrow, or I guess by the time our listeners are listening to this today, Apple having a tough time after earnings would be the thing that is the Dow already down on the year?
The Dow is, as of today, negative on the year.
Yeah.
There's not going to be an earnings surprise, I don't think, from Apple, given what we've seen.
A guidance surprise.
So possible.
But I think that the positivity in that new high yield savings account they have that just came, I think that was 2 weeks ago when they just launched that, and they got $1 billion in deposits in the first 4 days. That's
That's incredible.
Yes.
That's a huge number.
4 days.
240,000 new accounts. That's through Goldman Sachs. That's at 4.15 APY. Bank of America, Chase, everyone is still at 0.01%.
Would you bank with Apple? I would.
Absolutely.
It's Goldman.
The caveat is that you have to already have the Apple card. And then it's all accessible through your Apple Wallet on your phone. So I think with the guidance I think they're going to give us, I think it's more about, rather than what this earnings report is and the guidance for it, is that Apple is becoming like the Apple of everything. Apple's the future of everything, the lifestyle of everything. And as they're building out these new product offerings, how they integrate into our lives, it's kind of like becoming like Amazon and Apple. They're going to be everything.
I've always said they're going to push to be the biggest brand in every space. So we'll talk about it later, but part luxury, part healthcare.
Yeah.
But look at how much market share they could take away from crypto in the staking space. When I looked at the rollout, I'm like, this looks like Ethereum or Cardano of a year ago.
What? You're saying the
percentage?
The yield itself?
Absolutely. Because if I ask my aunt, who knows nothing about crypto, she'll never buy crypto, but she will buy Apple. So since they're the most trusted brand, look at the conversion that they'll be able to have.
Oh, so if somebody's trying to get 5%
Yeah.
staking something with the most sophisticated, I would say, annoying technology possible.
Yes.
Or you could just do this.
Why wouldn't they just do it
Pair it with
through
Goldman.
the biggest company that's profitable? And
So Jamie Dimon talked about this on the JP Morgan call. He's been talking about this a lot lately. Just to look at JP Morgan and say that they're monopolizing banking. Walmart is going to be a bank, and so is Apple.
Yeah.
Are those brand names at all non-competitive with JP Morgan and Bank of America? I don't think so. Like, I think those brands are just
when
as
you say
big, if not
Apple's going to be a
bigger.
bank, you don't mean they're going to like register for a charter or anything like that. They're just
No,
going to be
I
in
don't
banking
think they would
services.
want to.
Yeah.
But if they can deliver a savings account at a good yield and you can access it through iOS, why wouldn't you?
Well, they are.
And it is, actually, I don't know is it FDIC insured?
I'm sure.
Your deposits, I'm sure
Dude,
it must
honestly,
be, right?
I'd rather have it be Apple insured than FDIC insured.
Good point.
Or either way. But I mean,
But so it says-
just even with everything going on with regional banks, like if there's more options like this for people to plug money in at different types of accounts to get coverage of some sort, I mean, that's literally what we're talking about all right now.
Is Apple a tech stock or a luxury brand?
It doesn't. The multiples were never a tech stock. Never traded like a tech stock from a multiple point of view. It
Like
was
a
always low.
consumer electronics stock would have a very low multiple.
No,
historically.
people would always say that it was trading like at a hardware multiple, right? When it was like 11 and 12 times.
And it never belonged there because it's so much bigger than
But
that.
I think it got up to like mid-20s.
Chris, I put this chart up. Let's put this chart up. I put this together very quickly. I should say Sean put this together. Is the PE ratio for LVMH, Moet Hennessy versus Apple? And I mean, it kind of. I don't know. I don't know if this is like charlatanism, but I don't know. Do you have a take on this?
Like, is this a chart crime?
Yeah, is it a little bit of a
It's not,
chart?
I've seen it way worse. It's okay.
So there's not stock prices, but LVMH, which is the world's largest luxury goods retailer, they own everything except for Gucci, right? Is about 33 times earnings, and Apple's 28.
So I could hear
I think
both
they're
ways.
hybrid.
Like, should Apple trade at a premium, just given how gigantic it is? You could say like, come on, it's $2 trillion. How much multiple expansion could there possibly be? But then you'd be like, what other company in the world, like literally in the world, can do what they do? Where they say, all right, savings account, and you get $1 billion in 4 days.
That's incredible. I think they're the greatest publicly traded stock of all time. I think it's a combination of luxury, tech, and eventually healthcare. Because if you want growth, the only area that they can go into is finance and healthcare. They've dominated every other space.
Yeah.
They're already getting 30% of everything out of the App Store. They destroyed the music industry brilliantly. What else is there to do
I
besides
don't know
healthcare?
how much revenue the AirPods are doing, but
They are killing
is it like more revenue than McDonald's or Netflix? I don't know, I'm making that up, but it's something crazy.
Just in the
insane
AirPods?
number.
Just in AirPods, it's
The
crazy.
world
That's the thing.
business is
But I
crazy.
think that they are, and obviously they've been trying to do this over their earnings reports and guidance for many years now. Is like going away from leading with sales of hardware to like becoming a lifestyle brand. Everything that's cardless, cashless, paperless. Like Apple can drive your lifestyle from your phone.
To your point, they stopped reporting the number of iPhones they sell.
Yeah.
That used to be the number that Wall Street would hang on every quarter.
Exactly.
How many units? Now they'll give you the revenue for the segment, but they're out of this game of counting how many phones because the installed base of current phones is so big that it's almost not important.
Yeah.
And not a lot of people that are iPhone users, if their phone breaks or gets too old, go and buy something else.
Yeah, it's
And that's how it becomes a luxury brand. There's just a percentage of the population that are just Apple or nothing.
Yeah.
Well, like Galloway used to show that chart in New York City and the surrounding metro areas of where people have an iPhone and where people have an Android. And
The further you go from the
further you
center
go
of the
out,
city.
it's very socioeconomic.
Absolutely.
Really?
Yeah.
Actually, that I didn't know.
Yeah.
So that's what makes it a luxury brand. Like Galloway's point is, like, there's 10% of the country that they will
It's a
only
status
ever
symbol.
use it.
Absolutely.
An Android phone is that much cheaper than an iPhone?
I guess so.
I think some of
Some are, not
some
all.
didn't know that.
But
Some
even
are
in the
free,
dating
but some
scene,
of them
it's
are
a
great.
thing. Like if you text someone with a green bubble,
Yeah.
it does kind of signal that you are not high status.
Ooh.
That is a big thing. And back to the AirPod revenue, 23.
But just because you have a blue bubble doesn't mean that you're high status.
That's very true as well.
Yeah.
That's very true. Apple AirPod
But if you're wearing a
revenue,
blue suit, it does.
Well, he's status.
played.
He and his status.
appreciate
to the
Or a
max.
blue T-shirt, Michael.
Yeah.
yes.
Thank you.
$23 billion in revenue for 2020, more than Twitter, Spotify, and Square combined for Apple AirPod revenue.
Is
That's
that
insane.
that? I mean,
$23 billion?
what do we think about? This is in the doc. I thought this was interesting. The guy that they say is the godfather of Google's AI program quit Google, warned of its dangers. Apple hasn't even come out with whatever they're going to do in AI.
Yeah.
But you could assume it's going to be something mass market and consumer focused. But just generally speaking, this is the whole story of 2023 is AI and how excited investors are and finally having a new technology to talk about, which I guess this replaces crypto and cloud.
Yeah.
That's now old news, and this is like the new shit.
I know. I need to get with it. I need to learn more about
Is there an AI Leanna out there yet?
I
you
hope
created
not.
yourself out there to answer
But
questions?
I guess I should make one because I need to be with
Someone's
going to
make one if you don't.
If you don't do it, yes, someone will.
How excited are you about AI in general, and what are you telling people who ask? I'm sure you get asked every day.
Yeah, I think if you're not using the platform and the tools that are available, you're going to get replaced. So whether you're in a job, in a business, even for me in the business, like I replaced probably 12 people with it just being more efficient. All the stuff that I'm seeing in music, Biggie rapping Nas, and that's been interesting to see how the music industry is adjusting there, but just on the content creation side as well. Absolutely. I haven't been this excited about business and entrepreneurship since I started.
Yeah.
Like the opportunities that are there just to create and develop things at lightness, even like video.ai to cut up content, or the stuff you can do with Open Labs and like Synthesia where you can like replicate your voice in 30 minutes. Like,
are you using any of it for your business or not
all
yet?
of it.
Yeah.
Auto GPT, Chat GPT.
Wait, are you AI right now?
Yes, this is AI Ian.
Are
The
you
real
here?
Ian is at home.
What did you think when you heard Biggie rapping "New York State of Mind," which is a classic Nas song, and it sounds perfect? It sounds like it's a real
amazing.
Biggie song.
First thing
I don't know how I felt about it. I'm not sure.
I thought it was amazing, but the first thing I thought for the artist is like, you're in trouble.
Well, that shit went viral. Like
Yeah.
that went global.
Yeah.
That was a big deal.
And the Drake and Weeknd song.
Right. So
That was
they
huge.
took Drake's voice, they took The Weeknd, and they made a new song. And the guy is like wearing a sheet over his head, which I'm not crazy about.
There's going to be a bull
Yeah.
market and legal fees for this sort of stuff.
Oh, absolutely.
But then I heard Grimes, Elon's ex-wife,
Brilliant.
who's also an artist. I heard she came out and said something like, anyone that wants to create a new song using my voice, I'll split the royalties with you.
Yeah.
So that's like
Embrace it.
that's another way to think about it. It's like, all right, my voice is out there in the world. I've made 1,000 recordings. You could probably feed it into AI and create something. And if it's good and it makes money, thank you for doing that. I didn't have to do anything. And let's split it.
Yeah, but what does that mean? Just send me a check? Like, there's a lot of shit to figure out how this is going to work.
I know, but just it's a different philosophy. So Drake's approach is
I'll sue you.
tell every streaming service if they don't remove that right now,
Yeah.
they're going to lose the rest of my music, and it's trouble.
Yeah.
And then you have an artist. I don't think she sells anything near what Drake
at
sells,
all.
but I'm saying like just as a mentality, like sure, use it, cut me in. I'm cool with it.
One of the analysts asked Daniel Ek from Spotify in the conference call about like all of this sort of stuff, and he's just like, "Listen, it's moving so fast. Like we don't know yet."
Well, I was going to say it's kind of they could integrate it with blockchain, but it's the same thing around regulation of like crypto and the rights to different things. I don't know what the different legal guidelines are around music and your voice, someone's personal voice, and using that for another purpose and being profitable off of it.
So
But
royalties on the blockchain, like it sounds like silly, but I think that that's probably going to be the thing.
Absolutely.
yeah,
And I
but yeah,
won't-
again, it's
how
moving
else do
so
you track
fast.
it?
How do you
Right.
like?
It's just you can
how do
build
you
into the
control it?
code where
So I told ChatGPT to write a blog post about investing in international stocks in the voice of downtown Josh Brown.
And how did it come out?
Because this is what I am these days. Terrible.
Really?
Yeah. Nothing anywhere close to what I would do writing about that topic, because it's not creative. It's generative. What it's doing, so what it's doing is it found mentions of me, and I guess some of the mentions of me are articles about me. That's not relevant, but I don't know if it knows that. Then it found some interviews that I gave, and it pulled some phrases out that I know are things that I've said. But all it's doing is recombining whatever the source material is into new versions. So there were a few things about it. I thought there'd be like 5 F-bombs. There were none. So that's how you know I didn't write it.
Whoa.
So I'm less worried about that. What I'm more excited about, I think, I'm worried about the stuff where it can mimic someone.
Yes.
Or you can take a video and make it look like somebody did something.
deepfakes at scale.
That's the part that I'm
Yeah.
worried about. I am not worried about it as a job replacer for creatives. I think what it replaces is the people who can least afford to be replaced. So if you come out of college and your first job, you're a copy editor, and a company could just say, why are we paying this kid, $60,000 plus benefits right out of school, when I could just take this copy, feed it into Bard or ChatGPT, have it cleaned up for grammar, and have it automatically published wherever I want it published.
Yeah.
That's going to be a real issue.
Yeah.
I just don't listen. I could be 2 years from now. It could be laughable. What I'm saying.
No. So Sam Altman he's a founder of OpenAI. Was interviewed by Barry Weiss, and I found this in George Peleg's blog, Substack. He said, this is a quote from Sam Altman. Over time, the shift of leverage from labor to capital as technology continues gets more and more extreme, and that's a bad thing. And I can imagine technology like AI pushing that even further. So exactly to Josh's point.
Well, it's all anything like back office analysis, research, writing,
grunt work
journalism.
is done. Grunt work is done.
But the problem is that if you take away those more entry level roles for people, how they learn and work their way up, eventually baby boomers and all of us will age out of the system. And then how are those new leaders created in industry without having that experience?
That's such a great point. Yeah. You need grunt workers, not for the grunt work, but so that they will be the next non-grunt workers.
How do you climb the ladder if there's no rungs on the bottom of it?
Yeah, exactly.
Right. You hollow out certain professions. There's just going to be this lack of like real experience because people weren't needed early in their career. And
to grab them earlier. 8th grade, 9th grade. I'm dead serious. Like
my son's 6. I put him to
work. The number one
thing
thing in our community that
Ian's going child labor.
So like with AI,
you do have controversial views. You're right. Child labor. Go on.
4.
Xander, I need you to do more work this weekend. But when I'm looking at the AI landscape and for the jobs that will be replaced, our audience is like, well, this widen the wealth gap.
Absolutely. I think it has to.
Yeah, absolutely.
Doesn't every technology widen the wealth gap?
Yes, it does.
Yeah, that's unfortunate.
So if this is as big as the internet, like if this is that earth-shaking of an emergence of a new technology, I mean, we probably can't predict the ways in which it'll affect the workforce.
No way.
But you can't say it won't.
Yeah. I think prompt generation and curation for AI is the new version of coding.
Wait, say that. What do you mean by that?
So the ability to prompt correctly and chat.
Prompting. Okay.
Yes.
Like how to give the right instructions to the AI.
Yes. For that and curation through Midjourney and to be able to create. Like I've seen someone like work on a short film through Midjourney. It was amazing.
Midjourney is like artwork, not text.
Yeah.
Okay.
So knowing how to do those things at scale. Because if you look 25 years ago and say, hey, we'll be sitting in a room doing a broadcast at scale, people will be like, it will cost too much. Like, I think the evolutionary leap that we're going to take in the next, especially when ChatGPT 5 comes out and then when Apple gets involved, and the first thing I thought, why don't they have it for iMessage yet?
Yeah.
So when we have those things there,
they will.
When we have it at scale, it is going to be game, set, match for a lot of people, and we have to adjust.
Talking about technology and what it can do, and I think, were you and I talking about how progress is deflationary? Or was I was talking about somebody?
Is it always, though?
For most things.
Technology progress.
Yeah.
Is.
So for example, over the weekend, Patrick not over the weekend, it's Thursday. We were at an event that Patrick O'Shaughnessy was at, and he was interviewing some guy, Jason, I can't remember his last name. But anyway, they were saying that the battery that's in the Tesla today, if that was built in 1991, it would have cost $1 million to build.
Wow.
Crazy.
Was it Jason Statham?
I think AI will be the third biggest story of 2023.
What would be the top
What
two?
are the top two?
Like inflation and interest rates and
Still?
banking.
You still think we're going to be worried about inflation by the end of this year?
I think it's still going to be a topic of conversation. Interest rates and inflation will end up being like the number one thing still of 2023.
Interest rates, yeah.
But I'm putting both those in the same category. And then number two is probably like banking, shakeups in banking.
I think that's, I think that and AI are the two big ones. We already have a case of AI having a direct effect on a business. So there's a stock, Chegg. Anybody ever heard of this?
Yes.
Yeah,
Not before yesterday.
It's got the stupidest name I've ever heard.
Not before yesterday, actually. Truth, yeah.
All right, let me set this up. The stock dropped 42% after warning that
they were going to become a bank.
We're going to become a regional bank. Chegg plummeted 42% after warning that ChatGPT tool is threatening growth of its homework help services. One of the most notable market reactions yet to signs that generative AI is upending industries. So Chegg gives online guidance for students taking tests and writing essays. That sounds like cheating.
Done.
They gave revenue and profit forecasts for the current quarter that fell well short. Chegg makes much of its money from subscriptions, which start at $15.95 a month. That's a revenue source that's in peril if students see AI chatbots as an alternative to paying. The impact. All right. That's a thing. IBM said they're going to replace 7,800 jobs with AI. This is not a 2024 story. This is now.
No.
Also, to the other one today, chipmaker AMD up 8% just today on the Bloomberg report that they're going to be working with Microsoft on a new AI processor. That was like just.
Oh, that's a big deal.
Yeah, it was just today, one day.
Right. So this is like, we were talking about AI like 3 years ago or 2 years ago, like this is coming. Now it's here. And it emerged like overnight, November 30th, ChatGPT went live. And now we already have companies that basically are being decimated.
We'd be honest, Check's business model was shitty beforehand.
Yeah.
It did well through COVID. Great. I'm looking at the price now. Topped out at
it's a piece of shit,
$115
I
and
agree.
21. It's down to $9. If
Wow.
like if your company got destroyed because of ChatGPT right now, the business model was wrong. Going back to Apple with having a luxury price, the margins are really thin. So if you're charging $15.99 a month, most people are dropping off at month 4. You only netting probably 18 to 13%. It's a horrible business model as is.
Yeah.
The question about IBM, why did they not have this when they built Watson? That's what is going on with their leadership?
That's such a great point. They've been talking about AI
Forever.
and this stupid Jeopardy playing robot for like, I don't know, 10 years.
Well, what about Google? I just feel like when you get to the point of like, you have that much to lose and a lot of companies would just rather melt the ice cube, right? Because they're not worried about 20 years. They're worried about like 20 days from now or the next quarter, the next quarter, the next quarter.
Is that a mistake though?
Absolutely. Well, from whose point of view? If you're not worried about like 10 years from now and you're worried about self-preservation, like incentive-wise for yourself, it might not be a mistake, but it's a mistake for the company long term.
Absolutely.
Speaking of self-preservation, we had a Fed rate decision this week. There's not a ton to say about it. The bank stocks all crashed throughout the course of the week. The Fed seems not to be that worried about it, which is either a good thing or a bad thing. I guess we'll find out. Let me set this up. The Federal Reserve raised rates for the 10th time, 25 basis points. The new target range is 5 to 5.25.
10 times.
10 times in a row.
Wow.
Without stopping. That's the highest Fed funds rate since 2007. Things didn't go well last time. The statement hinted at a pause. They took some stuff out of the statement that made people think, here, this is Brian Westbury at First Trust. The Fed removed language from the previous statement that it, quote, anticipates that some additional policy firming may be appropriate, end quote. They also took out a reference to future increases in the target range. So the emphasis is that now the emphasis in the statement is that further rates hikes may be appropriate with no reference to future increases.
They're done.
The market is saying that they're done, but not saying that they're cutting. But maybe 3 or 4 quarter-point rate cuts by the end of January 2024. So were either of you guys surprised at all by that? Do we have these charts?
Yes.
So let's put this first one up real quick. This is the stock market reaction, and let's put up the next one. So this is the new target range. Were either of you guys surprised at all by anything that went down in the reaction or the statement, or not really?
I don't think so. I think consensus has been pretty much right all along, and which is a good thing. Like there shouldn't be big surprises out of this every month, right? But I think the comments and what they do next month is going to be a big thing for what happens, obviously, with regional banks, but just how the rest of the year is going to look as well.
What do you think?
I wasn't surprised at all. I expected a quarter. The question is, what number do we need to get to balance the market out to where they need? Because, of course, they just raised, so they can't cut right away. Yeah. They'll wait till next year, but do we need to be at 6.5%, 7%? Like, what's the real number to stop the bleeding? And I know he's in a tight spot, but it's like, I feel like he's giving conflicting messages every time that he speaks.
6.5 is devastating.
Yeah.
My opinion.
I think June is going to be really interesting. Like now it's like I think it's getting so close that people really want to know, like, when is there going to be a pause? But what happens in the next like week over the rest of the regionals, like the ones that are going down now following yesterday, like that, I think, is going to be really telling as to what they do in June as well.
This is the second time in a row that Powell said, all right, we're just another 25, just another 25. And the bond market said, I don't believe you. Yeah. The 2-year fell last time after they did it. I think they raised to 475, 500. The 2-year immediately went under 4%, I believe.
Yeah.
And it did it again yesterday. Same thing. And it's following through today a little bit to the downside.
The regional bank thing is gotten much worse. And so now First Republic is resolved. People thought in the media that would put an end to this. Mm-hmm. And that happened over the weekend. And so Monday morning, the market opened up. JP Morgan basically stole First Republic. And I think there was an assumption out there on the part of some people, maybe even me a little bit, like, okay, the bank run part is probably over. Mm-hmm. And now we have a few banks that are still in trouble and they'll get rescued, but they're not as big as First Republic. These are small banks at this point. Comerica is not big. What are the other ones?
PacWest,
which I never heard of until 2 months ago. Western Alliance, which I could care less about.
Yeah. First Foundation.
Yeah, I think it's not the banks themselves, it's the amount that could be in trouble. That's startling to the markets.
I think it's the contagion effect of like there are hundreds of thousands of millions of people that are employed by and use these banks regionally in places that are not New York City or Los Angeles or like major coastal cities. You know, a lot of people that are part of your community, I'm sure, are banking with these regional banks because that's what's nearest to them in their small town. Like it really has a big contagion effect, and that's what's scary to me as someone that is DMing with and talking to people day to day. Like this situation does not help generate trust in the financial system or in the banking system for at-home investors.
So no depositors have ever lost money in the history of the FDIC. Mm-hmm. It's almost 100 years. It's never happened. And no depositors have lost money this year, but it doesn't matter.
It doesn't matter.
Because people don't understand that. They don't want to hear it. They don't care. And that's why the money, I think, remains in motion, and the cost of funding these banks just goes up as the Fed does what it's doing.
I would say the average person probably doesn't even know what FDIC or that there's $250,000 of depositor insurance.
Well, Gallup did a poll.
We know it. That's not the average.
Gallup did a poll April 3rd through April 25th, so effectively in the midst of all this. They said, how worried are you about the safety of money you have deposited in banks and other financial institutions? And only 20% said not worried at all. 19% said very worried. Another 29% said moderately worried, and 30%. So it's about 50% of people are worried.
But that was a month ago too. Let's see what happens if they do this month.
And you know why this is relevant? They're not asking how worried are you about the banking system.
Yeah.
They're saying how worried are you about the safety of money you have deposited in banks, and that's all that matters. Well, and that's what's getting lost in this discussion about the system is strong because Citigroup and JP Morgan, and they have these ratios. People don't give a shit about ratios.
Yeah.
Like they care about their money. And that panic, maybe it's slowed down, but it's still with us.
I would have liked to have seen a follow-up question. So like, are you moving your money? Because like, what does moderately worried mean? Like, are you worried to the point that you're moving your money? I think another thing is like, even if people will say, okay, I'm not worried necessarily that my money's going to disappear because I don't have more than $250,000, but I'm worried about getting 0% interest rates. Pay me. Right? Like if I could get 4.5%, so that's why the money I think continues to remain in motion is people just want to get paid.
And if we think about it, banking is maybe one of the only industries where almost at scale no one trusts the players there. Like I can name every other, like there's no Steve Jobs in
It's true. It's like less trusted in the government.
I was about to say custodians, but that's banks too.
Yeah. Like Jamie Dimon may be the most trustworthy publicly facing, and most people don't like him. Kudos to everyone at JP Morgan. Love you guys.
Yeah.
But most people couldn't tell you who was the CEO of PacWest, and we talked about trust before.
Yeah.
I don't know why they don't have more people that are advocates of those institutions to build trust. But even with the federal chairman, I think they should just deliver the news and like, this is what is really going to happen. It will suck. Like same thing in parenting. If you're like, hey, I'm going to ground you for 2 weeks, but after these 2 weeks, if you never do this again, we're clear. Great. I think when we tell a person we're going to raise rates, then cut, and we're fine, and the entire world is panicking, like even our audience, they'll go on CNBC and watch you and look at everyone's, they're like, the investors look worried. How are you going to tell me not to worry about a bank?
Oh, that's interesting. Like I see volatility on the screen on CNBC. Yes. So why are you telling me to remain calm?
That everything's fine. And then banks, it feels like 2007 and 8 all over again. There's a lot of pressure on regionals, and I think the big four are going to get even bigger. Mm-hmm. But it was a great acquisition for sure.
It does feel like, does everybody feel like you're taking crazy pills? It's like, wait a minute, the Fed is hiking rates after
and rescuing banks simultaneously.
Like, what is happening here? So they asked Powell, a reporter asked him, just wondered if you have any regrets, or was there anything that, decisions that maybe you regret now in light of what's happened? And Powell said, I've had a few, sure. And he did it with a smirk on his face.
Sinatra.
He's
had a few.
Who doesn't look back and think that you could have done things differently? But honestly, you don't get to do that. I kind of would, if they could, you get some truth serum in him. What does he regret? I would guess it's waiting so long to raise rates.
So
they didn't start until March last year.
March of 22.
And inflation was already over 6% for multiple months.
Yeah.
And the housing market was on fire, and they were still stimulating the economy. Like, I would think that would have to be his regret, as opposed to like all of these consecutive rate hikes.
Yeah. It's one of the hardest jobs in the world, though. Like, I don't think there's been a blueprint for what to do. Of course, we can sit on the sideline and say, I would have done this. But in that seat, man, that's incredibly difficult. And also, for the first time in 2020 in a long time, people felt like, okay, I can get into crypto, investing, and make money. And now people feel like it's been snatched away. So we had 1 year to make a lot of money to make up for the losses that we'll have for the next 3. That's a tough job to
I'm glad you said that. Like, how many people started investing for the first time in 2020 and 2021, and then the rug was pulled?
1 out of 4?
Like, almost, yeah. An entire generation discovered the market at the same
now,
time.
how about this? Retail investors became 25% of the daily volume.
Yes.
Like, that's insane.
And when we talk to our audience, they feel like it was planned.
What do you mean?
That's like, as soon as we get into real estate, crypto, NFT, indexes, they pull the rug on us because they didn't want us to have wealth.
I mean,
if every age range,
but that's what happens in every bubble.
It happens in every generation
every bubble.
too.
Yeah. Like by the definition of people chasing.
Yeah.
People chase more. Somebody's the last one in the door.
Absolutely.
So my generation got rugged. The Gen Xers discovered investing in the late 90s, early 2000s.
Penny stock mania.
So I was like the youngest. I was the youngest. This is very important for everyone to understand. I'm the youngest Gen Xer, born in 1977.
Okay.
Like my year.
So you're like almost a millennial.
I'm like a child.
I'm almost the
when
oldest
you think
millennial.
Well, we know you're a man-child.
My hair got rugged when I was 22.
Yeah, that's true. That was planned.
Bald is beautiful.
No. But like my generation discovered stocks in like 98.
Yeah.
Everybody at the same time.
God.
And then we had 2 years of making tons of money, and everyone got real comfortable, and everyone thought they were a genius.
Yeah.
And then it almost felt planned. Like how fast the NASDAQ fell apart.
Oh my God.
And like not cut in half, down 90%.
Yeah.
And all the stocks that people were actually trading went to zero. And it felt that way. It felt like a betrayal.
Well, I hope that they took some of their profits and bought a house.
I certainly did.
Because that's what I graduated college in 2009, trying to get a job in finance. Ended up getting one that I didn't really like very much as an advisor. I just didn't like the firm I was working with. But I saved my money and bought a house.
That's a great investment.
And that was the best investment I've ever made. More money than stock so far.
Good for you.
That's incredible.
Listen, thank God NFTs weren't around then. You might not have the house.
Do you think some of these super cycle debt bubbles are created by venture? Because I don't think we've talked about the role that angel investing and venture has had in these bubbles.
That's
99,
a great point.
2005.
Because
Now-
what they did, I'm sorry, finish your thought.
No, you go ahead.
What venture did was they subsidized all of us
Yes.
for the last 15 years.
Yes.
How many years did Uber lose money for? All of the companies that we were the beneficiary of, for how long?
Airbnb,
Like all of them.
Grubhub.
All of them. We'll do the Series D. We'll do the
DoorDash.
Series G, L, M. They just kept going. Lose money, gain market share, just keep going. We got your back. We'll fund you, Yeah. And they were a huge part of this.
FTX.
And not all in a bad way, by the way.
Yeah.
Like they gave us a lot of incredible products.
Yeah.
But right, and then the switch flips, and they will have to make money. And
They leave crypto and go right to
But wait,
AI.
but the pandemic was the switch. Like that was what caused all of the shit that we're dealing with now, and we're now all of it. Us being at home, locked up, just trading.
So if they pause in June, and we just witnessed the last hike of the cycle, what does the stock market do? Let's a guess. Is that bullish because they're
bullish.
done? Or is it bearish because, oh my God, why did they pause?
The pause is either super bullish or super bearish.
Yeah.
It's
That's
be
right.
either way,
Going into the next 3 or 4 weeks, the June meeting, very telling on what the summer will look like.
But you know
You
why?
think so?
Yeah.
Okay.
Because
I
they
think
only
so.
cut when shit is breaking, right? So the cut.
No cut, just
They're not
pause.
gonna
No, I
cut,
understand.
yeah.
I understand. But after a pause, eventually is a cut.
Well, yeah.
Well,
Right?
that's, yeah.
Well, no, not
Hopefully.
necessarily.
Okay, so
pause and then start hiking
Let's
again.
talk about this. So Powell said yesterday, the case of avoiding a recession is, in my view, more likely than that of having a recession. I can't imagine he would have said that 6 months ago. He probably would have been much more vague about it. Just the fact that we can be here legitimately talking about no recession, a soft landing is possible. Despite all the banks blowing up, like a lot of the economic data, Atlanta now, the Fed tracker is, I think, projecting 2.7% growth for the next quarter.
Really?
Like the fact that they could even pull this off, whether or not they deserve credit for it, is kind of nuts.
Yeah. And one of a kind situation.
Like 10 straight rate hikes, banks failing, housing market frozen, a million other things thrown at us, and it might be okay.
Put this chart up, S&P 500 after the last Fed hike.
This from Callie Cox.
So this is interesting. The outcomes, I don't see any rhyme or reason here. So this is every month and year where the Fed had done the last rate hike, and then they're showing you what the S&P does up to 12 months after that hike. And
it's not quite binary, but it's pretty extreme.
But it's all over the place. It's August 71, May of 74, February of 95, June of 06, all these moments. And stock returns range after 12 months, range from down 15% to up 35%.
But it's really bad or pretty good. So 1987, we obviously know what happened in October.
Sure. Yeah.
They stopped in May 2000, right? We know what happened in the tech wreck. They stopped in June 2006. And all of those led to catastrophic markets, right? Like not 12 months later, but 3 months later, 5 months later. Really, really bad.
I would love to see that data versus when they were pumping in money versus when they were halting a little bit to see if that would make a huge difference in these gains. But
there's no precedent for what we just experienced. Like if you're looking for an analog for what we just lived through,
you can't find
forget
one.
about it.
Yeah.
Regional bank losses this week, and this is as of Thursday, so expect worse Friday. And Michael just bought the KRE, so you know they're not fully done going down.
Oh, God. That slides to 25.
I'm into that.
I respect that buy.
No,
And
I'm into that.
I would buy it at 30 though.
No, I haven't bought Panic in a while.
So you bought pure panic today.
I mean, I was thinking FRC, but I'm glad I just didn't
Not
have enough
you
data
didn't.
points.
I'm not. That's crazy.
That's crazy.
Well, I'm
nuts.
talking like,
You're
I don't know,
insane.
2 months ago.
Yeah, yeah.
But
Okay.
but yeah, I didn't have enough data points to have conviction
Leanna
on
is
that.
so gully. She's like straight for the
Optimistic, yeah.
FRC.
I do it all, you guys. Like Coinbase, I'm like into whenever there's negative news, I'm like, ooh.
All right, here's the rundown. Pac West down 6. This is this week, guys, and it's Thursday. Down 67%. Home Street down 48%. First Horizon down 47%. Metropolitan down 40. First Foundation 35. Western Alliance 34. Comerica down 25.
It's bad.
What's West Banco?
West Bank.
That sounds fake. Down 25%. Zion down 25%. And we won't throw Schwab into this conversation, but that has not had a good week. This is pretty wild that that's happening with simultaneous rate hikes. And we're all just like, all right, let's see how much worse it's going to get.
In a vacuum, if you knew that
These were companies, not just stocks.
just in a vacuum that regional banks were failing left and right, maybe left and right is a bit of a stretch, but I mean, they kind of are.
That scale, yeah.
You would say Fed's probably cutting.
And yet,
It's tough. I mean, Pac West is at 308 now. I mean, in 2000 and what was that? 8, it was at 0. Got bailed, of course, and pushed back up to 12. But I think all of these are going to go back to lows. Previous episode, like never buy lower lows.
yeah.
Like we're going to see KRE maybe at 28 or 29.
No, I'm just kidding.
Well, he just did it, so.
No, you're right. No, listen. But listen, here's the thing. A lot of people are buying these stocks. Vanda Track or Vanda Research was quoted in the Wall Street Journal saying, before SVB failed, net retail purchases of First Republic was $20,000 to $60,000 a day. So basically zero. That figure surged to an average of $9.3 million a day. On April 24th, when First Republic disclosed that it lost $100 billion in deposits, net retail purchases were $8.6 million. And here's why.
What the hell are these people doing?
Here's why. They found Mr. Hamlin, who said that he likes to trade stocks in small increments as a, quote, diversion. He says he was emboldened after making money on Hertz, which paid out shareholders despite the bankruptcy we know about. He said, quote, this is fun money. I call it my ice cream account. There's a lot of people that are doing this mildly responsibly, like I am. So I just bought a little bit. I'm gambling. I'm having fun.
Is that your ice cream account, Michael?
It's not, it's all good. Whether I make money, I lose money. But so $9 million sounds like, holy shit, $9 million up from an average of 60,000. But how many people are we talking about?
Yeah.
Right? It's a lot of people. So a lot of people are just like, whatever, I'll buy $2,000 worth and it's a lottery ticket, I'm having fun.
What are you telling like the Red Panda people if they come to you and they're like, is there an opportunity here or how should I?
I'm like, you're an idiot.
Yeah. Okay.
Flat out, because you don't want the risk. Because I know
you talking to me.
I was just gonna say,
not
whoa.
You're a seasoned investor, right?
LOL. But if you're gonna be reckless, be reckless responsibly.
How do you do that?
With the small.
That's like getting halfway drunk. I'm a quarter high.
No, with the small amount of money.
Stop.
Yeah.
Okay.
No, with the small amount of money.
Be reckless responsibly.
Yeah.
Oh, that's a great.
I mean, you can
that's
have
like your tagline.
10 shares, 20 shares.
Responsibly
swing trading. I'm not
reckless.
opposed to that if it's at the right level. But what we know when most people are trading AMC, GameStop, Hertz, Doge.
But that's what
So
retail.
I'm gonna
retail
give
does
Michael
that
some
shit.
backup here, you guys.
Thank
Okay.
you.
So
it.
there's over 5,200 regional banks, local and regional banks. We're looking at a list of like 5, whatever. Half of us haven't even heard of it, and we work in the industry before today. There's 145 holdings in the KRE ETF. So if you're approaching this from an ETF perspective, those 145 holdings, and there's 7 in trouble this week of
you'll be
those
safe.
5,200.
And they're probably tiny in the index too.
So recklessly responsible. I'm buying an ETF. I'm not buying
ETFs
Pac
are always a
West.
great way,
Yeah,
Like if you're
getting
buying
exposure to 145 of 5,200 of these
Yeah,
banks.
might I lose
play.
money? Sure, no big deal. But if you're just like flinging like a individual regional bank here, like that's kind of nuts.
Like I know somebody that personally, like when First Republic dropped, they bought it. And then, shout to you, leave it in the comment if you want to. But he lost like 80 grand doing
Yeah.
that.
See, I thought about
that's
it,
too much
but
money.
I didn't
unless
have enough
it's
conviction.
Diddy, unless it's Diddy, and he's
No, it wasn't Diddy. But the funny part is like people, they will hide those losses until it was like, okay, it's from receivership. What does that mean? I'm like, well, what do you mean? He's like, First Republic. I was like,
No, because that's how you know.
Yeah.
tough.
There's also people screwing around in these stocks with options. Because
That's a lot of it too.
It's not volatile enough. You need even more juice.
Yeah.
What's in this KRE then? If it's not these bullshit stocks or they're not big in it, let's take a look. New York Community Bank Corp is the biggest weighting, 4%. NYCB, M&T, Regions. So First Horizon is in there.
Yeah.
And that's the 4th largest. Citizens, which one? Citizens bought Silicon Valley, right?
Yeah.
Okay. Huntington Bank shares, Truist, which I think is the old M&T Bank, merged with SunTrust, and then Western Alliance is in the top 10. So I mean, listen, I don't think they're all going to zero.
Yeah.
So I like the ETF approach. I do agree with you, Leanna and Michael. I just feel like I'm going to get it lower.
But individual stocks in the regional space, they have no competitive advantage.
But you don't
if
have
you
to
look-
time it perfectly, right?
Wait, what do you mean by that? Like just because they're in a region, that's not enough anymore.
It's not enough. I mean, we saw that in 2007 and 2008. Like,
Yeah.
they got squeezed and consolidated then. So if I'm comparing them head up, I have to pick Pac West, Regions versus JP Morgan, et cetera. Like, you can do it as a swing trade, maybe as a value play, but I don't think most people are going to get the return out of these that they're actually expecting.
So let me ask you guys this. In terms of the way that this might affect the communities, the local communities that use these regional banks, let's just say that a big bank buys one of these banks, right? And the branch is still there. There's a different owner. There's a different banner, a different logo, whatever. But more or less the same people are there. I'm sure some back office people might get, duplicitous roles get cut out. Are those banks now not going to extend credit because they're larger banks? Like, I feel like people keep saying that, and I'm sure there might be some truth there, but we don't know that.
Lending standards have gone up. That's data.
Absolutely.
It's definitive. It is harder to borrow money now.
Yeah, but that's because of the economy. That's because of the macro backdrop. That's not because they're now owned by a different bank.
No, but if there are less options.
No, my point is just big picture. Is less community banks bad?
Yes. How can
Yeah.
it not be?
Well,
I'm from Canada,
just 'cause
where
he's-
the system is. I'm still a Canadian, so I grew up with a system.
4
that's
banks control
completely
everything.
different.
Yeah.
Yes.
and there's a lot of stability there.
So it's good.
But there's a big
Yes,
so
I think so.
There's a big difference between 4 banks and 5,900, whatever the number.
Yeah,
probably don't
there's
need
a difference between
5,900.
having
I agree.
some, credit unions and regional banks versus 5,200 people with banking licenses.
So
firms.
not to get on a soapbox, but this is something you'll hear politicians say, make the case for, which is that they'll say our community banks, our local banks, there are roots in the community. They help, like one bank helps successive generations of the same family
Absolutely.
maintain their business or, take out another mortgage on a property when times are tough.
Yeah.
That's what you lose if you lose these 5,200 banks. And you might not give a shit, and there are people that don't, and you might say, well, actually, isn't it better if there are 7 mega banks that are sophisticated and know what they're doing? And I think you lose something.
But wait, I'm saying that these banks might still be there. They just might have a different logo. It's not like these banks
but it
getting
won't be the same.
And lending practices and the relationships will be different.
Yeah, probably. But I'm saying, but how bad? I just don't think we know.
We don't know, but they will replace tellers with kiosks and screens, and they will replace personal relationships with one-size-fits-all email communication, and apps will take the place of storefronts, and it's going to happen anyway.
Speaking of communication, is there a reason why the chatbots on websites are not replaced by AI? So I was on the phone, I'm like, no, customer service.
We're so bad.
Customer service.
That's you're at your most Jewish when you're pretending to yell into a phone at a robot. No! You don't talk like that.
I'm not my most Jewish in a matzo ball.
You're at your most like Larry David. All right, let's move on. Coinbase. This is something that I haven't seen before.
Mm-hmm.
New civil lawsuit accuses Coinbase directors and executives, a star-studded list of elite Silicon Valley investors, including Mark Andreessen and Fred Wilson, along with the company's CEO and its co-founder, of dumping shares soon after the crypto exchange went public, knowing it was likely to miss its financial targets. So, they named Brian Armstrong the CEO, they named the CFO. The two of them sold $2.9 billion worth of stock with those other names.
It's prudent. It's prudent right there.
Yeah.
Right after the market came public in April of 2021. I would just say, isn't that what the public offering is for? The insiders to get some liquidity?
I'm glad you said that. I was about to say, what's wrong with that?
Well,
unless there's blackout, unless it's something truly illegal.
I'm glad you asked. The allegation is that the insiders were made aware that some bad numbers are coming, and the public was led to believe that things were going great. That's what the lawsuit. Yeah. Between Coinbase's listing on April 14th and mid-May, Wilson sold $1.8 billion worth of stock. That's a lot.
That's a lot.
How much?
$1.8 billion.
Ooh.
He's a venture fund. He's supposed to sell stock. CEO Brian Armstrong sold $292 million worth. Andreessen sold $119 million worth. So that was a huge IPO, super hyped up. I think the stock went to 400 or something.
Wait, hang on. I'm sorry. When you said insider, I thought you meant an employee of Coinbase.
No, but these are venture investors
but isn't that what the IPO is literally for, to get liquidity?
It just looks really bad.
It's more of a moral thing.
There's so many issues in our space that are really kind of a lot of us, or maybe not the four of us, but are responsible for is the headlines in the media. It's not necessarily, if it's normal selling, that's not, insiders being sued. If they're allowed to do it, of course, and VCs, that's literally why they get involved in these deals.
They sell.
Look at all the SPACs.
Yeah.
Look at, Chamath.
They're not buying whole, it's not Berkshire Hathaway. We're a venture
illegal.
fund.
But I think the headlines are kind of messing with this one too.
But I think the thing when the venture and angel community are promoting these projects so much.
That's the issue.
And then exiting and not kind of saying, hey, I'm now getting out. That's when the moral hazard starts.
Literally look at all those SPACs that happened.
I agree. Yeah, Virgin Galactic was one of them. Yeah.
That's really the issue is that if you're the face, if you're a venture investor and you're doing all this media and you're on Twitter and you're crowing about how smart you were to be in Coinbase or any of these other things, and then so it almost becomes
gross.
It becomes part of your identity.
Yeah.
And then 2 weeks after the thing goes public, you sell $2 billion worth.
Yeah.
Even if you're entirely within your right to do that, it looks bad if the stock falls 90%. Or how much did Coinbase go down from the high?
429 down to, it's at 49 now.
That's never going to be a good look.
No. Yeah.
So the old model of hedge funds, venture funds is shut the up. Don't tweet.
Yeah.
Don't do TV. You're an insider de facto. You might not be a CEO, but if you own 5% of a company that's going public, you're a prominent face of that thing.
Yeah, but the fall of Coinbase's stock has not happened overnight. It's happened over the last year.
Mm-hmm. I mean, it started on day one though.
Yeah, it did. But it's that happens with a lot of IPOs though, and there's so many multiple factors from crypto winter. There's so much has happened.
I would agree that a lot of it was outside of Coinbase's control.
Like, I'm curious, were people talking about those sales when this happened last year, or is it just now in hindsight? I don't know.
Chief executives selling that much would always raise a bunch of red flags.
So this is the thing, though. It's not just chief executives. It's prominent investors.
No, I know, but I'm just saying seeing $2.9 billion sold by the CFO and CEO, isn't that a bad sign?
I agree that's like, you couldn't have spaced that out over 10 years.
Mm-hmm.
So I'm holding my computer to show a bar chart of all of these recent IPOs. The green is their current valuation, and the gray is what they were at the peak. So Coinbase went from a $65 billion market cap down to 13. Rivian was, my God, Rivian was 90. Now, I don't know if Rivian was the exact top, but everybody was like, all right, that's enough.
Yeah. In Coinbase's defense, if you read their S1, you read their filing, it's like hundreds of pages of risk disclosures. They basically, every potential risk on it, regulatory risk, all the things that actually happened, like there could be problems in the crypto market, there could be lawsuits. They told you what all those risks were. But in the moment they came public, April of 21, nobody gave a shit about any of that. Like, people were just buying things because they woke up in the morning. And the environment changed, and that's not inside of Coinbase's control. So, I mean, I'm not defending them in a lawsuit, but I feel like that part of it should be brought out.
And it goes back to your point that you've always talked about, not to invest in brokerages long term because of margins and regulations is really tough. Do we think there will ever be like a major crypto brokerage that is allowed here, or Gensler is just going to axe that completely?
Well, he won't be in the seat forever, and we don't know who comes in after him. I assume I don't know the outcome of the 24 election, but I assume the Republican that comes in, if they beat Biden, replaces him overnight with somebody that maybe is more crypto friendly.
Okay.
But the bigger picture for me, brokerage margins only go in one direction.
Down.
You can't get more for a trade.
Yeah.
So Coinbase had incredible margins in 2020. They could make a spread on trades that is like nothing else in any other asset class. And there was no way that was going to stay forever.
They still are. Somebody told me they were trying to buy USDC on Coinbase, just like see what it was like. 3.8%.
Yes, but the volumes have dried up. Nobody's doing that. The institutions are not trading at that rate.
That's insane.
It's insane.
That they're still
Why were they trying to do it on Coinbase?
They were just saying. Oh. But the fact that they're still doing retail like that, so they release this in all of their numbers every quarter. The institutional trading, I'm making this up, but it's directionally right, it's like 10 times what retail is, but they only make up 20% of the revenue. Retail is paying like 8, again, I'm making this up, 8 times more, whatever it is, than institutional money.
But
it's crazy.
In the financial, and they claim to be a moderate, that's the future of finance, is 3.8% spreads.
No, I think it's a past.
It's ridiculous. So we know that over time, spreads trend lower, commissions trend to zero. Why would crypto be any different? And of course, it turned out that it wasn't. All right, let's keep it moving. We talked about this influencer stuff. What else do we have in here? Oh, all the promoted crypto stuff and NFT stuff. I think a lot of famous people just got bad advice from the people that were around them. And I also think it was the era. Like, a lot of people just felt like the rules don't really apply to me.
Yeah.
I get an airdrop of a coin. I do not me. Somebody gets an airdrop of a coin because they're famous or they're like in the right room. They get the drop and then they go and do a TikTok and tell everybody, hey, this coin is great, and then they sell it.
Yeah.
And I think they probably just thought like it's a game, who cares? But a lot of regular people got just destroyed.
It just amazes me though. Like, when the day that Kim Kardashian posted that Ethereum Max thing and Floyd Mayweather, I was like, what?
And she's a lawyer.
That's
the crazy part.
Well, I mean, whatever. But
lawyer,
no, kudos to her.
Shout out to Kim.
But
no disrespect, but you would think a lawyer.
But she's not a securities lawyer.
That's
she's
true.
not a securities lawyer.
But you would think a lawyer might have come across some material giving them some sense that they are responsible for their own actions.
Yeah, like when you say they got some bad advice, of course, yeah, obviously these people have full management teams and legal teams.
You noticed the mother didn't do it.
I just can't
great
believe
point.
that
Chris didn't do
anyone
it.
said to either of those individuals to do it.
Yeah.
Like, I just can't. The day I saw that come out, I was like, what? That
Also,
was like the worst blunder of the
financial
year.
products and healthcare products are the two things where there's no leeway. You can't around with that.
Yeah.
Like, you could promote a bottled water, and like it's just not good water. You can't attach yourself to a token or like a pharmaceutical without like legal advice from somebody that actually knows those industries.
That's saying it. That really shocked me, actually, I have to say.
Brought me to the point that I put in the doc, but why don't you think more banks and institutions don't grab celebrities to advocate for those brands to build trust? Because if they don't, it ends up making room for Doge and Pepe Coin and...
Oh, why don't reputable financial institutions use celebrities?
Yes.
Insurance companies do. They take a lot of TV actors.
Yeah.
But
not in their prime, though.
No, but like Jake from State Farm, and he's always got like Chris Paul, and they're kind of. I think there's a hesitance on the part of celebrities to be associated with things that are not cool.
But isn't Kevin Hart attached?
Yeah, Kevin Hart does
Capital
something
One?
with Chase.
Chase?
Yeah.
Yeah, I think historically there's been a hesitance for like celebrities to attach themselves to like mundane things like banking, but insurance uses a lot of celebs.
Yeah.
Crypto, probably no celebrities want to touch that ever
Not
again.
now.
Maybe forever. The next stadium naming right will not go to a crypto company, I would assume.
Will it go to AI?
Yeah, it'll go to AI.
Yeah. Sam Altman.
It'll go to the new
rule the world.
It'll go to the new bubble for sure. What would you guys say to people who want to build a brand in investing or in financial media? Like what would be your advice to people who are listening to this and they're working in the industry and they want to transcend whatever role they're in right now? Like what are the best things that they should do? Not promote a token. Okay.
So, I think you have to have a genuine passion for the information and for the education that you've got yourself through your career or through self-teaching. Like, obviously, I've worked in the industry for over 15 years, but working in the industry didn't teach me like the personal financial knowledge, the personal investing. I work in institutional finance. That's not teaching me how to trade or how to be a long-term investor like I am in my day-to-day life. So I just am so passionate about how I have been able to build my financial life. And all of my friends were always asking me for help. So yeah, I decided to write a book and get on social media about 6 years ago is when I started. And I don't do it as a full-time business or role. It's just something that I do for fun to connect with my community and my peers. But yeah, you have to have a genuine passion and interest to just be doing good and sharing information and be helping other people better their lives.
You also tend to you have surrounded yourself with like some very well-known people in finance, and I know you're at a lot of events, and you seem to be like in the right place at the right time.
Well, I always plug myself into the places
you're good at
and
this.
people,
Yeah.
the people that I want to be learning from. I mean, I really do believe in that whole like the top 5 people you surround yourself with.
Absolutely.
So I mean, like
what's
now,
the rest of that sentence? You become
the average of those.
The average of the top
median of
5 people you spend the most time with.
But you made a good point about plugging yourself in. You have to advocate for yourself, and sometimes you have to push because nobody's going to do it for you.
Well, you guys, I used to pay tens of thousands of dollars to fly and register to all the conferences. Now that they pay me tens of thousands of dollars to host.
Look at you.
That was my 2022 goal.
Yeah, you ain't writing the check now. Now they're writing the check.
Yeah, I'm just hanging out with Ray Dalio every week, you know?
What are you going to this year?
Next one I'm very excited for.
Were you at Milken?
No, Milken's right now. I'm like the only one not there.
Okay, that's why we have you.
Guys.
All right, good. This is better than Milken.
California, future-proof.
All right, you coming?
That's not till September, but yeah, for sure.
Yes.
That's the
What
Super
other
Bowl.
finance wealth conference is on the beach?
None.
Beautiful view.
None.
Yeah.
By the time
I'm
they
down
all
for
start
it.
doing that, we'll be moving on to the next thing.
Yeah.
We're going to be on Mars.
Do you know about our musical guest? I know.
No.
I know. I was asking you.
Come on.
Whoa. Tell
you.
us off the air.
I got you. We're announcing that next week. What advice do you give people that look at you and look at Rashad and Troy and they're just like, I want to be in the game? Maybe they're in insurance, maybe they're in mortgages, maybe they're in trading. Like, what do you tell people that want to step their career up a notch?
Number one, tell the truth.
Okay.
So for me, I just started posting on Facebook in 2009. What got me my audience was me showing my losses.
Okay.
So in 2020, everyone started to treat this like a hustle. And back when I was doing it in 2009, if I like came to you and like I have a proposal, I'm gonna take a black kid from a small city that curses and love rap.
Yeah.
He's gonna be the face of investing. You're like, this business is gonna fail.
Yeah.
Right. But it was my passion, and then also number two, being honest about the losses. But most importantly, people have to talk about what they do. There's too many people that have theories. So when I'm like, hey, I love Apple, Microsoft, VO, VTI, I've done that for me, my family, and I got rich from that first.
Okay.
I didn't come out and set out to teach. Like I was trying to build relationships with funds, and they were like, "You don't have enough experience." And I'm like, "Look at my track record." So I think if truth, talk about what you're doing and talk about your losses, you'll be A-okay.
So let's talk about the world tour. You guys are playing the biggest stages. I say playing. You're not a musical act.
Has to be entertaining though.
But it feels like it feels like a concert more than it feels like sitting through somebody's seminar.
Yeah.
You guys, the crowd is excited to be there. You guys are amped up to be there. Tell us about the world tour and just the connections that you're making with fans all over at this point, it's global.
Yeah. We're doing London in June for Market Mondays World Tour.
Wait, stop. You did London last year?
Yes.
And where did you do this?
Royal Albert Hall. So like Adele.
You know what the Royal Albert Hall is?
Yeah, I used to live and work in London.
Okay.
Oh my God.
This is like where the Beatles played.
Yeah.
This is
where honor.
This is the biggest events. So you guys took that stage and sold it out.
Yeah.
One night?
One night.
Okay. And what was that like?
I mean, it's breathtaking. And the interesting part, because in London, a lot of people travel, but the trading market and investing market, they're very hungry. We take this for granted to be able to go to you should be at Milken, but thank you for being here, and being going to SALT conference or Money Show or Future Proof.
Yeah.
They don't have a ton of those there.
Okay.
So we sold out relatively fast, but they were hungry. Like even when we was doing the theatrics of coming out and the performative stuff.
But how did you guys know? Like, first of all, I don't know what's involved in booking the Royal Albert Hall. Mm-hmm. I would imagine it's not an email.
No, shout out to Ashley, though, for our amazing event.
Okay, but how do you know that you're going to sell it out before you go there for the first time? Now you know, but last year.
Just people in Africa messaging us in London. And even if I'm looking at the macro picture, my perspective is I got a place in Mexico this past summer. My thing is, even with content and business, everyone can fight for the States. If I can get Mexico, Africa, and Australia, I'm fine. Because when we go to Africa, everyone's like, there's no Kramer here. So if we can do the same thing and give advice, and that's why when I always...
There's no stock market celebrities yet.
At all.
It's
no one
very
to give
early.
Advice. It's very early. It's like 92-ish in comparison to where we are now.
Okay, gotcha.
So my thing was we have to expand internationally. And then we didn't know we was going to sell it out. But Rashad was like, we have to get the best venue.
I love Rashad's.
Yes,
Rashad's mentality, the biggest, like...
You have to.
Like everything Rashad does is like... We're either going to do this right all the way, or we'll do something else not worth doing.
It's not worth it.
Right. So he's not like in London, like, all right, here's our budget. What could we afford? He's like, Royal Albert Hall.
We have to get the
but then the people respond to that. They come out.
Yeah.
I thought that was amazing. So you're going back.
Yeah, we're going back there.
Where are you playing this year? Same place?
Peacock Theater will be there. And then we're doing Chicago in October, and then Ghana in...
Where are you going to be in Chicago?
We haven't announced it yet.
Okay. But I'm sure it's going to be nuts.
Yeah, it's going to be
Soldier
nice.
Field?
Maybe next year.
Okay.
But Investfest, it will be in Atlanta. We should do 20,000 people this year.
And when you go to Africa, Ghana is like are there people trading on their phones there and stuff? Or they're like
in Africa, like that crypto market is serious. Same thing, but there isn't a blueprint for safety there yet.
Okay.
So if even with indexing, long-term investing internationally, then I think crypto should maybe be 10, 15%. But they're hungry for the information. So even in creating a business, you guys are a prime example of it. Like you create the content, tell the truth, ups and downs. People build that trust.
Yeah.
Same thing, like never missing a show. So I know I probably shouldn't say it, but I'll give you an exclusive. We'll probably do like 7 days worth of events in Ghana.
That's crazy.
Yeah.
Takes a lot of energy and stamina for me to do like 2-day event.
Yeah,
I can't even imagine.
It's a lot.
And also, these people that come out, they want to touch you.
Mm-hmm.
They want FaceTime.
Mm-hmm.
They came all the way there from God knows where.
Yeah.
Like, it's not just like waving to them from a stage. You guys are like in the mix.
Have to. I mean, I'm grateful. I think a lot of times when people, and we all have done it at different points, but when I go back to when I was first just trying to build a business, I wish for this.
Yeah.
So I can't be mad at the audience. So like a lot of times Ashley will have to grab me off the stage and she like, I told you to come off stage. I'm like, they travel here from California. Like people came from Amsterdam last year. I'm like, I can't take 15 minutes and they bought a ticket and flew.
Yeah.
Because when I've met other celebrities that shooed me away, it made me have a distaste for them. So like when we booked Floyd was the easiest person we ever worked with.
So Floyd Mayweather.
When we did the show in Madison Square last year, he was like, I love what you guys are doing. I love that you're preaching about investing. I'll promote it for free. Even the rate that he get, it was like at cost.
Yeah.
So it was amazing just to see that. So I've always been humbled to be here, even be on the show. Like I've been a fan for the longest time.
Thank you.
But I don't take any of this for granted. So
you guys seem like you're having a great time. You got to get Leanna down to Investfest.
Yes, we have to. I would love that. Seriously.
Let me tell you one thing about it, and you and I have been to a lot of this similar events over the years. The big difference between Investfest and we've been to SALT and all the stuff that we go. There's nobody walking around there like they're the king of the world and they know everything. The people that are there, they probably know a lot, but it's not about what they know. They're there to learn more. And openly, I can't wait to hear what he has to say about this. It's very different than going to a conference where, like Sohn conference, it's for a great cause, but everybody there thinks they know everything already.
Yeah.
So I like that vibe.
Yeah, and the community is great. Like they end up doing business together, and some of them have broken into the industry and gotten jobs, and some of them raised real estate funds and stuff together.
So your headliner at Investfest this year is Diddy. Okay.
Yeah, and then Robert Smith.
Crazy. How do you keep Diddy on stage for 3 hours?
I don't know, but we got to figure out a plan. But he's going to be super vulnerable. Talked about ups and downs, how he's built his business. I think he's in a place in his career where he's done everything he can do, and he really wants to pour back, especially when we're in a recession. Our audience is panicking a little bit more, but you need those voices to speak and be a voice of reason.
I've been down too, and I've made mistakes too. Yeah,
absolutely.
That's huge. So he's going to do that. And who else is going to be there?
Robert Smith.
Okay.
So that's going to be...
He's a legit billionaire.
$8 billion, I think.
Yeah. Oh, man.
Yeah.
It's going to be great. Yeah. Congratulations on that.
Thank you, man.
Yeah. Proud of you. Let's do favorites. And it looks like the sun's coming out. So we'll let everyone get out of here today. Leanna, do you have any favorites for us? You knew I was going to ask.
I did.
Okay.
What are we talking about? Cities, favorites? Okay, here.
That's a good one.
Oh, I listened to a really good podcast episode lately that I think any entrepreneur or just investor should listen to. Do you guys know Ed Milet?
Yes, Ed is amazing.
You know Ed?
Yeah.
Who is that?
He's a Laguna Beach, California guy, but he was sort of in financial services, built a big business. He's kind of part of the Tony Robbins, Joe Dispenza crew of influential guys that has their own podcast. Yeah. April 27th, he had a podcast episode called The Lonely Road to Success, and it's about courage and endurance and taking the road less traveled and how experiencing loneliness is likely a sign that you're on a good path.
I like that.
I listened to it. It's really, 30 minutes or something. I really resonated with it because all of us doing things that are sort of outside the box, it's a big roller coaster, as you all know. So,
what was your biggest takeaway from it?
That it's okay for me to feel like shit sometimes. And be scared.
Okay. That's a good message.
Yeah. And lonely.
All right, we'll put that one on the list. What do you got for us?
A book, True Love. I like that book a lot. Well, I have 3. They all tie together. True Love. Well, in the last episode of Snowfall.
Okay, I haven't seen it yet.
You haven't? Oh, I want to ruin it.
I'm a season behind still, so I'll get there.
I won't spoil it, but there's a great lesson in how you treat people. So at one point, Franklin was on top of the world, and he loses everything, and now he's screaming at the people that he came up with, and now they have more money than him. He's like, "Give me the last of your $3 billion," and I think in the climate that we're in now, I think people think that the dog-eat-dog mentality works, and I'm like, every great brand, every person that we really love was kind, and it goes to show, if you're an asshole, at some point, things are going to turn around on you, and maybe some of the people that you did help are not owed to pay you back in the way that you want them to. So I think...
you could be surprised by that.
Absolutely.
You think you're on the way up, then you stumble, someone else is on the way up, and it's like, how did that happen?
We've seen this all. We've seen it with Madoff. We've seen it with SVB. It's just at scale a great lesson to remember to be kind to everyone.
What's True Love? That's a book?
Yeah, True Love is a book about a guy who's trying to find love, but he's using technology and AI. So it's really interesting for this time about how you really need to focus on the things that matter and not put tech in front of family and friends and love.
Okay, I love it. Well, and what's the China's new warships thing?
So it's a book called Concrete Podcast. So it's really interesting. They were talking to a military guy about their plan to try to take Taiwan and what will happen over the next 10 or 15 years.
Bullish?
On China?
No, I'm just kidding. That's probably the thing that I worry about the most is whatever the hell ends up happening there.
That might be number 4 in 2023 in terms of topics.
Yeah, maybe number 1 in 2024.
You worry about that at all or no?
Absolutely.
No, not for me.
Really?
Not for you. Okay.
No.
You good with
I'm
it?
not saying that it's not worthy of worries. It's just outside of my purview of things that I worry about.
Do you think, like, as a country, we are losing our way, and then even like on a tech side and company side and IPO side, we aren't as great as we used to be?
I don't know. I don't know if that stuff, that's, again, outside of my lane. I don't know if that stuff is overhyped. Like, we still have the best companies in the world. Are we maybe falling behind on, like, blockchain regulation and, like, what we're doing there to foster that? Yeah, but I don't know. I don't know many other places that I'd rather be.
Well, that's the big thing. Do it all over, wake up. Do you want to wake up in a different country or not? And I can't answer yes.
Yeah.
So.
Favorite cities?
Chicago. In our country.
That's your favorite?
I do love it there.
Chicago's amazing.
I like Orange County, California.
Yeah, that's beautiful.
I'm excited.
I could live there.
Yeah.
I could live
This wasn't in our country, but I put Accra, Ghana. I did an event there last summer.
Did you?
And some.
What's the name of the city?
Accra.
Is that the capital?
Is that where your event's going to be?
Yes.
I assume, yeah.
Oh, do they have a good bagel store?
I doubt it.
I will report back and let you know.
What did you like? What did you like most about it?
I actually did. I was hosting MC in a family office event. I got to interview Queen, which was my first royal interview. That was cool. And I did
Queen of Ghana?
Well, they have like multiple queens there.
That's incredible.
But I did with some of the family office people, sort of helped arrange and put together a trip and doing some outreach and giving to an orphanage for kids with HIV, which was a life-changing experience. That's a day where an entire trip where it's like gratitude for living in this country and every single thing we have. So that was a real positive experience for me last summer.
Very cool. Very cool. All right. My favorite is, do you know this kid, Jamie Catherwood? I know you know him.
No, tell me more.
What?
What? Go.
You love what?
I love Jamie. Go.
Why did you start laughing? What did I miss?
I was with him this week.
All right. He did this thing that I thought was cool. He has a blog called Investor Amnesia.
Oh, so yeah.
And one of the recurring themes is like going back, looking at history, and like pretty much most things have happened before. They just, the names change, the places change, some of the details change. So he did this thing that's like a financial history timeline. And it's really cool. It starts in 1494 with the birth of double entry bookkeeping.
That's so beautiful.
And you just like, you go through the years, 1571, the Royal Exchange, which is the first time people were trading commodities in an organized way. 1602 is the first IPO. It's a Dutch East India Company. And I just thought it was really well done. It's not a lot of reading. It's just a timeline with, one illustration or picture and like a paragraph worth of stuff on it. And if you want to learn more, he links to the best book or article or source. And when you go through this, and I spent like an hour with this, you just realize like these are all analogs for things that are happening now. And we don't realize it at the time, and it always feels different. But there have just been a lot of things that have repeated throughout history.
Well, people are the same today as they were in the 1700s.
Well, it doesn't
we have different tools,
but it
but
rhymes.
That's
History.
That's right. But like even like here, 1690s, they had an IPO bubble.
Nice.
And I did well in that one. But like there's just a lot of stuff that we've seen before and we will see again. So shout out to Jamie, and it's investoramnesia.com, and you'll see the financial history timeline as one of his pieces that you can link to. All right, that does it for us this week. I think we covered it all. Duncan, is there anything that we need to announce?
I would just add that
I feel like I got shortchanged on that one.
Which one?
Favorites. That's okay.
You didn't give us
what are
one?
your favorites?
No.
Oh, dude.
No, we can't wrap up.
No. Turn those machines back on.
Can I just say something real fast? One of my first videos I did here was with Jamie Catherwood. So look back to 2019 on our YouTube. And find out.
What did we have? What was he on talking about?
I don't even
Probably
remember.
investor history.
Financial history.
Yeah.
All right. Well, what do you got for us?
So,
I'm sorry, Michael.
That's okay. I was at an event this week with the folks at Canvas/Franklin Templeton, and Patrick O'Shaughnessy. Patrick O'Shaughnessy interviewed this guy in like 2016. Was an early invest, like the best guess. So this guy was on stage for 90 minutes. His name is Eric Maddox, and he is the interrogator who was responsible for finding Saddam Hussein.
Wow.
And he changed the way that we do interrogation. I think the numbers that he gave was prior to his techniques, it was like a 4% success rate. And he got it up to like 60% or 80% or something crazy.
What, bigger baseball bat?
So the topic of the chat, it was 90 minutes, and everybody was like literally leaning forward,
Glued, yeah,
hanging on the edge of their seat. It was about empathetic listening, which apparently the audience tells me I could work on. But it was
Do the comments get to you? Sometimes.
0% chance.
Not anymore. Gotcha. It happens when you're passionate, though.
Well, we got an email last night.
Go on.
Did you see that?
No, I don't see the emails.
All right, somebody emailed everyone that I work with, Josh, Barry, Chris, Bill, our PR, just trashing me with screenshots of comments, just trashing me. And I was listening to a podcast last week with Brian Russillo. It's this guy who does, I forget his name. He fills in for Ernie on TNT. And that crew has been doing it for 20 years.
Yeah.
And so he was the new guy. And during the break, he's on Twitter, and he's like, Shaq like almost smacked the phone out of my hand and said, don't do that. Like, don't look at that shit. And the guy's like, and Shaq's like, no, I'm serious. Like, do not look at that. He goes, we're aliens. They're earthlings. And so I don't view my audience as earthlings, but I get the point. Just like, do what you do and don't let that shit get to you. And it's listen, of course, like I don't like it, but I don't want to see it. As long as I don't see it, I'm okay.
Yeah, you're fine.
What, comments? Guys, can we be nice to Michael in the comments?
My guy. No. Can we be kind to Michael? Everybody in Red Panda, please put in chat. We love Michael.
Can I say one thing that people don't understand? The amount of work that you do for all of our content. You're on Animal Spirits. Animal Spirits Talk Your Book.
Hit that button, Josh.
You're on What Are Your Thoughts? You're on, dude. And then you do the Compound and Friends at the end of the week. And we create these shows with docs. And you're in the docs making sure we have the right topics, the charts, the data is up to date. Like, people don't understand how much work you do before the cameras even turn on. And then you're a little bit of a dick. But before that,
by that point, he's just over it.
On camera. In person, Michael would give you the shirt off his back.
Yeah. So, guys, come on. Like, please. And don't start on me either, though. Like, don't.
Please don't. Yeah, because I'll get back in the comments and argue with you over Josh.
I'll just quit. No, we love our commenters. We love our audience.
We're gonna send our AI back up.
We need it. Wait, so why did the interrogation change? That's like the whole thing I wanted to hear.
So
before the pity party that you threw for yourself.
Stop.
Batnick Appreciation Day.
What are you doing?
So no, the guy said to me, he's like, you don't get it. Like, you don't get me. You don't know me. And that was like a light moment. He's like, you're right. Like,
the terrorist that he was interrogating?
Yeah.
You don't know me?
Like, whatever. Yeah. It was like, you don't
I don't
understand.
think I'd be a good interrogator.
You don't understand.
Yeah.
And so that was like the light bulb switch flipped, and he said, like, you're right. I'm just interrogating. Like, just get these people talking. Just get them talking. Just talk to them. Ask them about their family. Just get them talking.
Be kind.
Just be a person.
How old is this guy, out of curiosity?
He's probably 50 at this point. I'm guessing.
So he's quite experienced.
Yeah. But he was a Chinese linguist. And the story of how he got to Baghdad was like nuts. Like, he's like, why me? Like, I've never done this before. Yeah. It was an incredible talk.
We have breaking news. This gentleman, this interrogator, was just replaced by ChatGPT. So it turns out they asked. All right, listen, we're gonna wrap it up. Thank you guys so much. What a great week, Nicole, John, Duncan. We did content from multiple cities this week, multiple guests, all kinds of crazy stuff happening. You guys keep it running. Please be nice to Michael and me in the chat. We love you. Leave us a rating, leave us a review. We'll see you next week.